All right, Bulls and Bears, back with another dose. BX4, bull to the bust. Economic reality, ride the bull, prepare for the bear. I apologize that I did miss the report yesterday. However, today is Tuesday. It is August 27th, 2024. We're going to get caught up on all the economic financial news. The politicians, the bankers, the powers that be, the money masters, the market manipulators, the puppet masters at the top of the pyramid. They are doing everything they can do to keep this economy looking like it is strong, and people, for the most part, are falling for it. And I almost can't believe some of the news that I have to bring you today regarding the housing market and what they're doing to keep this housing bubble inflated. We're going to talk about that here in a few minutes. But first, let's go ahead and get into some other news right here. We've got the Dow Jones, NASDAQ, S&P all in the positive. Of course, you're probably watching this on Wednesday. It's another late night report, by the way. Oil coming in just under $76. Gold, $2,560. Silver just over $30 as I report this. Folks, the day for silver to shine, not just shine, but massively glow, is getting closer. Folks, we're inching closer and closer towards what I think is going to be a not just economy changing situation. It's going to be, I think, life changing, right? And we see all the things that are being done to keep this economy propped up, all the rescue programs. Let's go ahead and get right into it, folks. What are they doing to keep the housing market inflated? Folks, we have, first of all, let's look at some Redfin data here. Bring this up right here. According to Redfin, prices continue to climb. Now, when we look at the Fed median home price, we're actually showing price drops year over year. But the Redfin in the markets that they track does show still prices up year over year, about 439,000. So why do you think that is? Why, at this point, when home prices are where they're at, all-time high or all-time low unaffordability, whichever way you want to look at it, the worst unaffordability, how can they keep going up? Well, look at this. Here's just one of many examples. We have down payment assistance programs implemented already and being discussed here. California moves towards zero down payment assistance programs for migrants. That's out of Newsweek. California close to approving a $150,000 loan for immigrants. We have Oregon. They plan to offer $30,000 to help non-U.S. citizens buy homes. And let me just bring up the headlines here so you don't think I'm making this up. Oregon plan $30,000 to help migrants buy homes. California moves towards zero down payment mortgages for migrants. Folks, do you think the housing bubble is going to bust when you have, is it 10 million? Is it 20 million? Is it 30 million? Nobody knows the number. When you have this many new potential buyers now and they're getting down payment assistance, I don't see any housing bubble going bust. You may see some price declines here and there, Florida, Texas, to name a couple states. But for the most part, do you think prices are going to crash with this type of activity happening in the background to keep this whole thing propped up, folks? All these new buyers, again, nobody knows, but it could be 10, 20, 30 million new potential buyers now in the housing market. So you've got a limited number of homes, but it seems like an unlimited number of buyers now with all these programs. And it's not just this. It's not just this latest with the migrants. Even before this, we've got all 50 states with down payment assistance programs, even before this, for years, going back many years in some cases. And you would think with home prices at all-time highs, according to Redfin, all-time low unaffordability, you would think that they would try to maybe have prices come down a bit, but you don't. The powers that be don't want that. When home prices are falling, the whole economy goes behind it because, one, you have consumer confidence tied to home prices. Even people that aren't taking out home equity loans, just knowing what their home is quote unquote worth. And I say quote unquote because it's not really worth that unless you sell it. Because if everybody went and sold their home to try to get what it's worth, the prices would start plummeting. So it wouldn't be worth that anymore if everybody continued, or if everybody decided to sell at once. But let's take a look at some of the peaking prices here, just to bring up a couple here. And I say peaking, it could be peaking, but it might just go back up with everything happening right now with all these down payment programs. And out of Wolf Street, We saw the big spike up there in San Francisco. It dropped. People thought that was the end. Mortgage rates went up. But look, home prices went back up even since mortgage rates went higher. That's San Francisco condos right there. Seattle, same thing. Big spike up, drop. People thought the market was done. Higher mortgage rates. Instead, what do we see? An uptrend over the past, 2 years? Phoenix, same thing. Big spike, drop, but an uptrend over the past couple years, even with higher mortgage rates. Portland, same thing. Folks, do you believe me yet? Do you see why I say what I say? I'm not making this stuff up, folks. The markets are completely manipulated. It's completely propped up based on these rescue programs, easy money, the government coming in, buying unlimited amounts of mortgages. They just add it to the debt. There's no limit. It's unlimited. Somebody tried to tell me the other day, no, they can't keep doing this. There's got to be an endpoint. Maybe if a black swan comes down that's big enough to disrupt the entire financial system. But without something disrupting the entire financial system, what is the endpoint? We already have $35 trillion in debt. You think they can't borrow $35 trillion more? You're crazy. There's no limit on this. You think there's a vault somewhere with money that they're using for this? Of course not. No, it's just digits on a screen, folks. They can click a mouse and create billions of dollars out of thin air. Put it this way. You work your whole life and you make less than they can create at the click of a mouse in less than 30 seconds, 5 seconds. Your whole life, right? That's how it is, folks. That's the system of money. Everything we're talking about here goes back to the system of money. Look at this, folks. You think that when I said the housing bubble wasn't going to go bust 4 years ago, I was just saying it to get attention? Of course not. It made me very unpopular. In fact, a lot of people unsubscribed. They left my channel. They said, this guy's crazy. Home prices can't go up even more. Folks, you got to understand how this whole thing works. Easy money, qualifying millions of new buyers with assistance programs, rescue programs, all the things we saw in 2020 caused inflation, not deflation. Do you believe me yet? Do you see what's going on? Do you understand? And I know I shouldn't get, annoyed at the 1 or 2% of people that are, saying that this is wrong information, that this is doom and gloom. Folks, this is economic reality, folks. I wish it wasn't, but this is economic reality. And most people have no clue what's going on. Look at this. Consumer confidence hit highest level in 6 months in August. So people now, they say, wow, okay, we're going to cut rates. It's going to make things easier. Folks, it's going to make things more expensive. Lower rates equals more expensive. You would think higher rates would make things less expensive unless you got millions of different new buyers entering the market. It's going to mess up the supply-demand equation. So it's not about interest rates, folks. You got to look at all the rescue programs, all the things that are going on here. You got to look at the big picture, right? Let's move on here. We got some other things here we want to catch up on. We're seeing RVs. RVs are actually in correction territory. Motorhomes, even campers. And what do we have going on here? Some pretty big price cuts. We've got a 2023 Winnebago. Let's see here. Originally $363,000. Now it's $229,000. That's 37% off. 2024 Thor motor coach. That is over 40% off. $103,000 instead of $174,000. 2023 Grand Design Solitude. We've got it's a travel trailer there. 69,000, just under 70,000, down from 124,000. Another smaller travel trailer in this case, just under 40,000. Suggested retail 65,000. So some pretty big price cuts happening with RVs, right? So you see this inflation over here, deflation over there. It's a very mixed market right now when you look at asset prices. But the RV market here, let me just try to get you some numbers here. RV downturn turns apocalyptic, with some dealerships offering up to 55% discount. So we're going to keep an eye on that. That's one area where we are seeing some deflation. Let's go over to some news here with Big Lots. We know that Big Lots closing down most of their locations. I don't think the store is going to survive at all. We've got, though, some greed inflation happening here. Big Lots offers $5.2 million in retention bonuses to 4 executives. The move could signal a potential bankruptcy on the horizon. That's what the bigwigs do, folks. The people at the top, they get out with huge golden parachutes, as some people call it. big paydays. If you're going to get $1 million and your company fails, do you actually care at the end of the day? No, you're getting $1 million. The people that work there, they're going to hopefully find new jobs. But this is what people do. They sometimes purposely run their company into the ground because they can take as much as they want. So that's part of greedflation. Would the prices at Big Lots been maybe lower if they wouldn't have had such big payout packages to these top few executives? Or would it have not been enough to make prices lower, to maybe get more people shopping there so the store could survive? I don't think anybody knows. If you know, please let me know what you think down in comments with the Big Lots bankruptcy. And one more thing here. With the cost of living where it is, let's talk about some, I think, insanity here. This is what people are paying. San Francisco, bring it up here. Live in a sleep pod community for $675 a month. Folks, $675 a month. We're a 14-person co-ed community. $675 a month. A 0-bed, 3-bath apartment, and you've got to share the bathroom with a bunch of other people. Hey, who took my toothbrush? All right, where's my floss? Look at this. $675 a month, folks, for basically sleeping in something smaller than a closet. I've got a walk-in closet that's bigger than these things. Folks, it's insane. This is what the world is coming to with this inflation monstrosity, folks, and they're not going to let very many price corrections happen, especially when you look at the housing market, folks. It's insane. What do you think about the down payment assistance? What do you think about the prices, the bubbles, the powers that be keeping these bubbles inflated, except for car prices coming down, RV prices coming down? A lot of that, though, is lower demand because of the high fuel prices and the gas prices that have remained stubbornly high. So I think without the high gas prices, you may not even see corrections in the autos or in the RVs. That's pretty scary to think about, but I think that's what might be happening. Anyways, we're going to wrap it up. What do you think about all this? Please let me know down in comments. Keep stacking, everybody. We'll talk to you soon. Bye for now. Peace.